All right, we're live. Everyone's here. All
GM's
right,
here.
guys, GMs. Let's dive right in. Let's have a look at the markets, dudes. What did we pull up? The crypto heat map, classic.
Yes,
Yeah,
sir.
let's start with that.
All right. What do you guys think? Green?
I hope so. I think so. Right, past few days have been okay. Yeah, we had some good ETF flows.
Yeah, I think record for Ethereum, right? I think
Yeah.
finally got
Total
some.
cumulative historical record. Yeah. Pretty. Yeah. At some nine figure inflows. So that's like pretty big for Ethereum. Yeah,
Rejoice for the .eths.
it's like the first time that the Ethereum ETFs haven't sucked. Basically, like the past several weeks that they've been green, and then especially this week they've yeah really picked up the pace, and yeah, the price reflects it. Double double BTC in performance, so that's nice. See, it's always doing it polyhedra network. It's always like adding like a boomer coin on this heat map. I think I know why. I think it's from like the Binance Alpha Points thing. But yeah, it's always doing that, man. BNB, it's always flat. Yeah, BNB is like the stable coin. So that's expected.
All right.
Yeah, it's a
Not
weird
looking too
one, isn't it?
shabby.
What were you saying, Stefano?
Not looking too shabby.
Yeah, it's been a weird few. Like since April, half participants I feel were in the camp. It's over. That's it. Pack up your bags. Go and get a job again. Crypto's finished. But like the other half, it was it's a mid-cycle correction. Was it just fears from the tariffs? It was the two. You could either say it was like, are we leading into like the double top that we saw in 2021, or is it just an insatiable demand now for Bitcoin as an asset? We're seeing so many more treasury companies pop up. How it ends, it's hard to
A
say
lot of
because.
treasury companies. Yeah, for,
Mhm.
for
Yeah.
things not even named BTC and ETH, you had the ASI one yesterday. That was kind of surprising. 500M buyback or not buyback, treasury scheme for the FET token. That's a pretty big one for like a non-major asset. Um, yeah, and they had like some smaller ones too. Have some. I think the
Yeah.
smaller ones are heating up. Um, yeah, we'll see
Yeah, I also rate
how
the.
big they
Sorry,
get.
go ahead.
No, go ahead.
Yeah, I also rate the crypto generally always follows the macro trend in a bit more of a volatile sense, and with the changes that has happened somewhat recently, things have quietened down there. I think folks feel a little bit more excited about jumping back into crypto. I see a lot on crypto Twitter today, and over the last couple of weeks that alt season is happening. I haven't personally seen too much evidence. This chart doesn't really suggest that. Like the whole market in itself has grown a little bit over the past couple of weeks, and I think a function of the total macro growth means that some of these alts have been jumping out, which is quite an interesting topic. But from my side, like I think the general sentiment on the total risk in the market now with what's been happening over the last 6 months has somewhat subsided, and folks have a bit more of a better prediction for the future.
Yeah, I mean it's a good time. Well, for you, it's a good like hyper. It's all season for hyperliquid. So like it's kind of like the only one that doesn't make a new all time
Yeah,
highs, and then it's all season for like all the boring stuff like
yeah.
stablecoin infrastructure getting bought up by Stripe, like all these things that people have never heard of. Privy, that was a new one. Bridge back in October, just getting yeah. I don't know how much Stripe acquired Privy for. That was announced a couple of days ago, but
Yeah,
yeah, it's like all
I,
season for all these random things that people on Twitter don't talk about.
yeah. I guess the question is, when do you go from alt to majors? Like, is Hyperliquid a alt today? I mean,
Ooh.
it's kind of doing a third of SEC's volume, like in total. Like, surely the question of whether it transfers from alt to major is like, we're at that cusp now.
Which is a top 10 token by
Yeah.
FTV over 20. Yeah, over 20B. Like I think in the past, one of our past episodes, maybe 1 or 2 months ago, we discussed like, oh, like some of these boomer coins that are still in between like the actual majors like BTC, ETH, Sol. I'll throw BNB in there as well, and Hype. And then now it's really just like I think like ADA. What else is ranked higher than Hyperliquid now? Yeah, it's like ADA, maybe Stellar Lumens, like these boomer coins. But there's only a couple left, right? So yeah, I mean it's a top 10 asset by FTV now. So yeah, I think pretty soon you got to switch it to be a major.
It's like the Grim Reaper meme. You know the
Yeah,
Grim Reaper meme where it's going through all the doors, killing all the coins.
yeah, and where is Hype on this chart? Actually, like that's kind of I don't know. Trading views like fumbling. I can't see it on the chart.
Hard to pick
See,
out.
even trading views fading it.
Yeah,
Like,
Yeah.
how much is CZ paying them? Come
Here,
on.
here. Hyperliquid. This one here, right here. Next to BNB, on the right of BNB, under Uniswap.
okay.
It's on there. It's on there. All right. Quick pulse. Yeah, talking about pulse. Let's pull up this other one.
Yeah, I mean, in our weekly market pulse, like we have to talk about Hyperliquid every week, basically. It's a hot thing. It's on everyone's mind. So I think this past week we had, I think it's the last chart all the way at the bottom. Yeah, some of these, the Sextadex or Hyperliquid, perp volumes. No. More down.
Just the last one, right?
Yeah, just the last one. So yeah, I mean, we've been covering this, like the Hyperliquid, the SEX trading volumes, especially like perps. I mean, perps has been like the on-chain perps, the SEX ratio has been pretty high, like since November, and then even spot now has really risen up. And then even in open interest too. Like I think a lot of people started watching this like with with James Wynn. It takes like an interesting story or something to put people's eyes on this kind of thing. But yeah, it's not like, I mean, it's pretty resilient. So it seems like the Hyperliquid, like I mean, it really is just Hyperliquid, right? Like when I talk about on-chain perps, it's kind of like a one-man show, basically. But yeah, I think it's definitely here to stay, and it's not going anywhere.
Yeah. In this kind of headline here, they talk about sound fundamentals, and I think that's something that the market was missing for a long time when it came to understanding the value proposition of on-chain trading. That Hyperliquid just managed to get a series of really good decisions on the product that they ended up building. Naturally the teams comes from a trading background, so they had a very good vision of what the product should feel like that would attract liquidity. Jeff's spoken about this a ton of times on Twitter and on podcasts. Some of the decisions that they made, and also in terms of like the market wanting the decentralized version, we've only had runs. No DEX has lasted more than one cycle in a meaningful way. Hyperliquid has all the kind of chance to be one of those breakout successes that do last multiple cycles. Whereas the sex versions of what we've had have always been around. They've got business models that allow them to kind of be a little bit more resilient, whereas the on-chain side has not. And so I think for the maturity of where DeFi is, the amount of liquidity that's on chain today, and the amount of liquidity that's looking to get on chain, trying to find a really good venue that's a good product, people like to use it, there's decent activity, the product's designed for the use cases that you would have in a centralized exchange. It just clearly shows that people were hungry for the on-chain experience, and it was more just a case of implementation that the Hyperliquid team absolutely nailed and are continuing to nail.
Yeah,
I think
100%. I think
Another interesting thing about Hyperliquid too is that, you know, in crypto, people love the underdog story, right? Not saying they are the underdog in any way, but, throughout the last year or two, we were plagued by, the high FDV, low float tokens, many different teams with all these vesting schedules, and it almost felt like they were token first, product later. We need to get the token out, pay the devs. Our devs are turning, water into wine because we're paying them such high salaries. But then, like, when you look at it the other way, the other side of the argument is, nah, fuck it. We've all made a lot of money already. We're just going to use all of the money to buy back the token. No token unlocks, no VC funding. So it's like this stark swing, from like one side of the previous models that we've seen to like the other end of it. And in a way, it kind of seems like almost the progression, because we saw meme coins rise up when everyone was sick of utility. Whereas now I feel like Hyperliquid came in at the perfect moment, just as people were so sick of all these vesting schedules, VC funding, seed rounds, in which people could stake tokens and dump the rewards on your head. And I think it's a natural progression in a way.
Yeah.
Yeah, I mean, in the last
Uh,
episode, I think our guest brought up the comparison with DYDX. But I think I think by now it's safe to say, like, yeah, it's Hyperliquid. It's no DYDX. It's it's a spot above on the totem pole for sure. Like, the results speak for themselves. And I mean, yeah, you can like just use the app, or just use the web app, and it's pretty clear to see. So
I often think about how things can be like reproducible in crypto, like Bitcoin, the Immaculate Conception really kind of is still one of the underpinnings of why people enjoy, honestly, just talking about Bitcoin. Um, and to your point there around no VCs around Hyperliquid, not many teams can do that today. There's very
right.
few teams that can basically bootstrap that entire economy by themselves. And so the barrier to entry to reproduce Hyperliquid with no VC funding is part of one of those things that are uniquely differentiated. And if we've seen from the first airdrop that everyone ever got, that was an amazing experience. And so you had to do something different every single time. And so crypto often like focuses on like what playbooks worked before and try to reproduce that to like diminishing returns over time. And kind of, I think the fact that Hyperliquid did things differently, tried something uniquely differentiated that got people's attention, is really what put it to the map. And because it's going to be extremely hard to copy that playbook, I feel like their position in the market will remain somewhat stable for a decent period of
Yeah.
time. And that upward trajectory of sex to dex volume will most likely kind of continue until it gets to a pretty stable, steady state.
Yeah, and real quick before we move on, yeah, you mentioned like not many teams can self bootstrap. There's one big one, Jupiter, and then yeah, now like this wasn't the case like a year ago, but now give or take the day, they're actually like the number two perps trading DEX by volumes, which was not. They only have like a few markets, right? It's like BTC, ETH, Sol. Maybe they've added more markets, but yeah, that is definitely interesting in like in the perps in the on chain perp space, self funded.
Yeah, for sure. Well, it's good to have some competition. It keeps you sharp. Um, Guys, I'm going to kick off the show now that most of our audience should be here. So, yeah, everyone, welcome to Market Cap. This is where we discuss market movements, current events, and trending narratives together with our guests and further explore the underlying themes of that. So, I'm your host and moderator. I'm Stefano, Director, Institutional Services at Alea Research. With me, I have Daniel, our research lead and BD, and we got Darren, our analyst and panel contributor. And with us, we have Chandler DeCock, co-founder and CEO at Silhouette. First off, Chandler, congrats on the announcement of your round. Uh, Big moment, obviously. You must be super excited.
Yeah, it's good to jump into the space with a decent set of backers. Um, we mentioned at the top of the call, not every team can bootstrap, but also teams that find good partnerships really help catapult them into kind of making sure they set up for the best amount of success. So raise announcement from our side went really well. We're very excited. The reception's been very heartwarming for us.
That's amazing, man. It's a big moment. Please tell us a little bit more about Silhouette and what you guys are building before we jump into it. It's very relevant, I think, to our audience of a lot of times institutional traders. We've seen this lately as well with that whole James Wynn saga, that it's actually very, very important in some cases to be able to protect your strategies, etc. But you know a lot more about that than I do, so please enlighten us.
Yeah, sure. So, what did we raise this all for? Like, what the raise announcement? What is Silhouette? What's the whole ambition here? So,
Right.
I I came from a background building in DeFi for many years. I've been doing stuff on the Oracle side. I've been building out components within the layer two bridging space, lending, kind of really underpinned by a core passion of mine, which is DeFi. Um, if you guys remember, a couple of years ago, the hardest problem that we were trying to solve as an industry was speed and scale. And looking at the chains today and the work that came to make those happen is fundamentally a kind of like a complete change. And nowadays, chains feel genuinely superpowered. Um, and so DeFi has flourished. You can now actually trade it at scale and speed, which has been like phenomenal experience to see from a product building perspective. What's now possible on chain. Um, Added to that, I come from also a somewhat technical background in cryptography, so I spent a lot of time in the ZK trenches when ZK was still super slow. It's now also improved, and really got fascinated about the concept of the on-chain privacy ecosystem and all the different applications that could be built using privacy. I think the case for on-chain privacy is so obvious on so many different levels, but has really failed to gain traction because there's, I think, a little bit of a mismatch between what's the privacy used for versus its actual like target audience. And a good example of this is back in the day when Signal was first launched. It was a terrible app. The privacy actually didn't matter because no one used it, and it was like actually not a usable product. But now today, if you actually use Signal, which is my preferred chat app, it's really good. It's on par with almost all the other chat apps, and its adoption actually turned out to be a pretty good growth for it. So the case for privacy is actually the product should work outside of privacy, and the privacy component should be a function of that. So with that in mind, let's kind of draw that analogy onto trading. And so if you're wanting to build privacy tool for a trading venue, what are the key fundamentals that like every trader wants? They want deep liquidity, they want fast performance, they want execution guarantees, and all these components really need to be tied together, even before you think about the component of privacy. So Silhouette was born as a part of that mission to realize what a private on-chain economy can look like, which is very similar to the world that we live in today, but with all the trust assumptions of blockchains built in, all the openness and permissionless components that we all just love as why, what got us into the space in the first place. And so we've been on this mission to kind of marry, the deep research that's happened over the last couple of years on the cryptography side and applying it effectively into the markets. That really gives a super performant use case for traders to be able to protect their on-chain strategies. Why do we think that this matters? You mentioned the James Wynn example. That was a complete like bullseye for us when it comes to why does this matter? Completely radically transparent finance is super useful at a market level. So we care about making sure that the integrity of the market is what we expect it to be. A lot of regulation is underpinned by the concept of making information as open and accessible as possible. The more information about assets that are out there, the more the market tends to an efficiency. And when they talk about privacy and market information, normally what they're talking about are the risks and disclosures around the components that happen there. We're not talking about that level of privacy. We're talking about the individual's entry into the market's privacy. And that's what actually fundamentally matters. if Darren ends up doing a trade on a hyperliquid and that trade can be hunted because somebody can see it, that's not necessarily a good outcome for Darren, even though the market is efficient and fair. Now, the the important part here as well is that we need to kind of still remain true to the DeFi roots that we're kind of building towards. So from our perspective, the theory and the thesis goes that market should be open and transparent, but user flow within that market should be able to be protected. So you can have the choice as a trader: do I want to be open and transparent and completely naked in the market, or do I want to be able to shield some part of my strategy for various reasons? Hedging can be a reason. I don't want people to copy trade me. I don't want people to hunt me. I don't want even people to know what my net worth is on this chain. There are thousands of reasons why the privacy actually matters. And for us, it's really striking that balance. That's, I think, a unique approach that most other teams that have worked in the privacy space have not really understood as deeply.
Right. There's an
Interesting.
actual use case. Yeah, I think attached to it. So I think
Yeah, I was
definitely things
gonna
like
ask, like,
Monero.
once you can be private, like, why would you even want to, like, be naked in the markets, as you said it, as an
Yeah,
individual, right?
yeah.
Like a
Uh,
legit question. Like, are there like considerations why one might choose that actually, if you
there
can
are
be
a
private?
couple, yeah, there are a couple kind of trade-offs to this. You don't just get the privacy for free and it immediately works. There's always a trade-off space here. So what are those trade-offs? If I'm a fundamental trader and I think that this asset is going to go up more than any marginal execution cost that happens because I'm trading naked in the market. Maybe I get quote faded, maybe I get MEV'd. There's various versions as where kind of the transparency has some hidden costs. If those costs are marginal relative to my expectation for that asset return, it doesn't matter. This asset's going to 10x. I don't mind paying a couple basis points extra just to get in because I'm so fundamentally like aligned with
Right.
what this asset means.
If you're
That's when the
hodling.
case it actually, yeah, that's actually the case when it doesn't matter. But let's say I have a probabilistic bet on this asset. I don't actually know which direction it's going to go. And I might want to then trade um, into it just to kind of see. And I might trade small size, I might trade a large size. The sizing doesn't really matter as much as the cost of that execution then becomes a much higher representation of the probable outcome. And therefore, execution guarantees actually kind of matter in that space. And so if you had to kind of see where these two types of traders would end up playing, there would the trader that might have a probabilistic bet cares about the execution guarantees versus the trader that actually cares about just getting into the market. These are two different types of use cases where one lends itself to open books and one lends itself to books that can kind of give themselves a better execution outcome.
Gotcha. That also seems to speak to the level of sophistication of those two types of buckets in general.
Yeah. I think on a macro level, if you think about privacy and why do you want to protect your order flow, like there, if you have a sophisticated strategy, it lends itself to maybe being copy traded. Uh, I think the bot economy now is so cheap that I could index every single wallet's history on Hyperliquid relatively quickly. LLMs and kind of AI today is so quick that you can also even just really get some good insights that if that information is there, hundreds of thousands, maybe even millions of bots are kind of using it currently. So, so it's very quick to discern who's making money and who's not. And then it's just a very easy strategy for me to just copy some of those traders. So from a perspective of if you have alpha more generally, um, you know, alpha is generated by a little bit more of a sophisticated strategy. It's not always the case, but most of the time, that those sophisticated strategies often then get copied or traders try and obfuscate their total position. Sometimes they even go cross chain to kind of reduce some of the net exposure on one particular chain. So from our perspective, like the case for privacy actually kind of makes more sense when you think about um, like the ability for you to execute in an environment irrelevant of your size.
Got it. Let's look at something that happened, right? Like in the markets, something concrete to make it all a bit more, yeah, to paint a picture. Like, question, right? Like, if how might things have played out differently? For example, for James Wynn, if he was trading on Silhouette, for example.
Yeah, so at a basic level, I think he would have executed into those positions. Those positions wouldn't have been headhunted, and he wouldn't have advertised. You wouldn't be well. He could have advertised them, but people wouldn't have like believed him because they couldn't see it on chain. Now, the real question you have to like ask yourselves is like traders play so many games at so many different levels. And the amount of attention he got, I think, was worth the trade for him at the end of the day, because like the amount of engagement that he got, the amount of kind of just overall attention is also worth it. So from a trader's perspective, he was basically trading his on-chain position for a little bit of attention, which is he'll value that trade.
Yeah.
But theoretically, let's assume that he didn't want that trade and he kind of wanted to actually make use his on-chain liquidity on Hyperliquid to be profitable. Then he would have ended up having that trade be obfuscated, and no one would have been the wiser. People would have seen the open interest on the Hyperliquid order book, but no one would have been able to associate that to an account that he has. But the way that he played that game very clearly showed to me that he was more interested in the public fanfare as well.
Right. Yeah, I mean, he's posting his trades. I mean, he's not posting his exact
Yeah.
like stop losses and whatnot. But yeah, he was posting every time he flipped directions.
Indeed.
So if I had to ask, like, who would be the ideal user of Silhouette, right? Because I think right now, like Hyperliquid's, you say product market fit is like it kind of stands out as like something that yeah, people like James Wynn, people that maybe like Americans who can't use Binance or whatever, they can hop on Hyperliquid, have like a pretty comparable experience. Like it's more expensive, but like pretty comparable experience, UI, a lot of markets. So like for Silhouette, are you looking to like mostly tap into like the existing Hyperliquid? I guess like whales, like that top percentile that's actually responsible for generating majority of the fees, or are you like thinking about people not currently using Hyperliquid today, or like what does the ideal user look like?
Yeah, I think the case for current users is pretty obvious. Most of the traders on Hyperliquid they're of the sophisticated type. There's prop shop, there's whales, there's institutions all kind of like circling around Hyperliquid. For us, our ambitions actually to think a lot larger than just simply our place within Hyperliquid, but actually that chart that we had earlier on this call where it's sex to dex volume, we want to be a reason for net new capital to come into ecosystems. Like I fundamentally believe the on-chain economy is going to be far more interesting to build on, to work in, than the legacy system. I'm not a fan of the replacement of the legacy system. That will always be there. I just think the new frontier of finance will kind of work on an on-chain environment. So to us, we kind of want to be able to bring those numbers down. So go from traditional finance versus crypto markets. That's like one big area that we'd want to like over a long period of time be an attraction for. And then more short term, the on-chain experience to kind of start pushing up against the sex volumes. There's a lot of things that need to happen before those two numbers can start increasing. And for us, what's really, really interesting is like, what are the new types of use cases that can be enabled that weren't possible before in the traditional world that like the on-chain economy is pretty good for. Like a good example is perps. Like perps is just an innovation kind of born out of
Right.
our industry and our need for like these types of the same economics that like most of the world kind of uses today, but just with a bit more innovation. And it's now dominating almost all the volumes in the world. And so what's that next version of perps look like? Or an example of what perps enabled? Like what does that look like? That's kind of what we've been thinking about over the past couple of weeks and months working over here with the team at Silhouette.
Love it. All right. Got. I thought someone wanted to say something. Um, okay, that's clear. You touched on Hyperliquid as well. you said your ambitions go beyond just hyperliquid, but for the time being, obviously, you're in this ecosystem. Um, where do you think you guys stand right now? And yeah, what's your take on the current growth of market of a hyperliquid?
Yeah, our choice for Hyperliquid was actually kind of obvious. Purpose built for finance, and that the mission vision really resonated well with what I think about when I think about my love of DeFi and all the things that come with that. So the choice of Hyperliquid was a very easy home to make. But Hyperliquid is not going to be the only venue for finance in the world. I think there's a case to be made that the new increase in just the number of performance chains that are coming out there. Some will
Yeah,
be DeFi specific, some will be general purpose. I mean, even Arbitrum today is probably the DeFi engine for Ethereum. That there will be interesting venues for us to go into the future. But the way I kind of see it is like let's you make a bet on an ecosystem. We were right with that bet. You own that market. You provide like utility and kind of useful features to that user base, and you absolutely establish yourself there. And then only much later, once that playbook has been kind of well thought through, and you know exactly the type of product that uh, everyday users would want, you start thinking about kind of going multi-chain. I think a big mistake most teams have very early on in their product development is to think multi-chain at the start, and then you're solving too many problems at one go that you tend to lose the kind of like the golden thread, the thing that got you your traction in the beginning days. And kind of that's compounded by the fact that multi-chain is hard. Like there are dedicated teams to build this. In one of my previous roles, I worked at Across, and Across solves this problem. And the amount of time, effort, thought, and kind of coordination that Across spent just to solve one particular problem and efficiently at that point, you can't expect a team to do that and then build some other piece of the DeFi stack. So I'm a big fan of the Lego concepts that like will help stitch a lot of this together. But in terms of like teams nowadays, focus on one thing, execute it to the best of your abilities, and then scale up from there.
Right.
What would you say are some of the problems or challenges that you've personally found with pushing Silhouette within DeFi in well, now that you've raised your round?
Yeah, I think privacy still does not sell. And I mean, I've been talking about it and the nuances that we think about from our perspective, but the argument in general still doesn't sell. The case for it's really easy when you dive into some of the mechanics, and but the overall concept still remains to be kind of seen whether that actually is the topic that's worth discussing. Now, a lot of events happened recently that's kind of shifted that a little bit. So talking about what CZ was talking about, the discussions about James Wynn, those are good examples of why this all matters. But at the end of the day, the product, like I kind of like alluded to at the beginning with Signal, the product actually just needs to work for the intentions that you'd want to work with it for and then the privacy comes second. So I think we leaned hard on the privacy component at a fundamental level, which may not be the most effective way of going about this. So that's been a challenge from our side. And then the other one is, and we know this actually as a byproduct of that, is that not everyone needs privacy, and realizing who needs it and who doesn't was a decent bit of feedback when we spoke to, I would say, about like at this point probably 1,000 prop shops and maybe like 2,000 whales individually. The reviews are very clearly diametric. I don't really care versus actually this is really useful. When will you guys launch? And there's been very little in the middle ground. So I think it's like a polar opposite system that we're working in, which is great because that will naturally lead to some contention. And a little bit of contention is great for eyes.
would you categorize those parties as firmly in crypto or in TradFi as well, or maybe sitting on that spectrum? And is there like a correlation between where they sit on that spectrum and their answer?
Yeah. Um, I think I think in crypto is the one where it's so diametrically opposed, more than in TradFi. I think when you explain the concepts of what you're trying to build to some of the TradFi folks,
Yeah.
they typically end up going, "Oh, yeah, that's actually something that we've been looking for a while. That's how we typically do things on our side of the fence." And so um, kind of the discussion I was saying earlier around being an attraction for net new capital, going from
Right.
TradFi to crypto, and then from SEX to um, on-chain, these components need to be there so that this conversation can kind of feel a little bit more familiar to those types of users. But in crypto, it's very much the idealists that like
Yeah.
really have these polar views, that the feedback I've gotten has definitely been on either end of that.
Yeah, the net new
Interesting.
capital is definitely important. Like, not even just for Silhouette, but for for hyper liquid sustained growth in general, right? Like, yeah, we're talking about the token. It's already at least off that token, right? So if it's going to continue going up. It's like where what warrants that, and yeah, what warrants that is there's whether it's TradFi or other capital coming in, and then some primitives, like shielded trading can play a role there. So then I guess what I would
Yeah.
ask is like, what is the like what do you think about like in-house infrastructure from these firms? Like this is already evidenced by like you have JP Morgan already having moved like trillions of dollars on chain, but they just made their own chain, right? It's called Onyx, or it's called Kini- I don't know how to pronounce it. Kinexis now. Yeah, they just made their own chain, spun it up themselves. So yeah, if you like are envisioning a world, because I've seen people talk about this, like in reference to Hyperliquid is like just having like perps are a real innovation, and you can have like existing TradFi markets with perps, and maybe Hyperliquid even is a venue for that. But if like some large institutions like Millennium, whatever, Citadel, or some smaller folks want to get involved with that, like why couldn't like a CME or one of these venues, like are you at all worried about them like kind of building out some of these primitives as well, like dark pool, shielded trading, that kind of stuff that can really like help to grow this, like help even out the DEX/SX ratio. I think you even see this in like stable coins right now, right? Like with Circle, it's like why couldn't B of A like launch their own stable coin? I think that it was just announced that they're like thinking about it. So
Yeah.
what are your thoughts on that? From like competing with, I mean, I don't really think you're competing with, as far as I know, I don't really think you're competing with anyone like in crypto, but maybe like the infrastructure from these well capitalized TradFi firms.
Yeah. So Onyx to me just sounds like JP Morgan playing tennis against the wall. You're just playing with yourself. I can easily move trillions. Like if I control,
Yeah,
I'm
that
not
is
playing against somebody else,
what it
right? Like,
is. That's what it is. Yeah, it's for their clients.
and
Yeah.
so and so you know earlier on in crypto, I think the whole concept of these like, I think it was called hyperledger. The word I can't remember the exact word, but it's basically these like institutional node based chains. They never really took off, and I think that's still their legacy thinking in that. I think genuinely decentralized chains that are out there today is a scary concept to them. The whole concept of no middlemen, it's like an antithesis to what they think and believe. So I think like there's going to be a little bit of convincing on exactly who are the controlling actors here. That'll always be the case. So that's kind of why I think even if like these big institutions stop thinking about crypto, the legacy systems will remain there because those rails will be fine. They'll live by themselves, and this new frontier will just be something completely different. Like the way that you use it is very different. It's like the way that you use email is very different to the way that you use Slack, which is a different way to use iMessage. You'll just open up new things that people are interested in doing. So I think for them to want to participate in that level, they really do have to come into those ecosystems and actually participate. And now you're playing tennis against the actual opponents that are on the other side. And it's a completely different like pun intended, ball game for them. And that'll take some time. I really do think that'll take some time. I mean, when I first got into crypto, they said, oh, the next wave of adoption will be institutions. I think I'm still waiting for that to happen, actually, now in 2025. This is from 2016.
Yeah.
And they do
Enterprise
move slow, and that's
blockchains,
fine.
yeah.
Yeah.
Remember
So, like, what are some of the driving forces that I think are interesting for some of these firms or new firms, new kind of like agent firms to kind of become the institutions of crypto? That's way more interesting to me. Kind of, no industry was disrupted by a legacy person. Like most of the time,
that.
there was always something new that happened. And so, examples of like what I think is like interesting surface areas for new institutions to really establish themselves is like things like HIP3, where you can deploy
Right.
your own HIP3 for the audiences. You can deploy your own markets within Hyperliquid. There's some requirements like $1 million hype to stake plus a couple other things. But at the end of the day, like, with a little bit of stake in the game, you now can be the creator of your own market. That concept, like just a little bit of requirements, which is more for a security mechanism to deploy your own market, is so completely new. And so anyone that's seeing that's innovative, is willing to take the risk, can kind of basically create endless markets for the on-chain economy. And so
And
that's like a really good catalyst. So you can think of, I'm going to spin up the RWA exchange using Hyperliquid's like stack, and I've tied into a ton of liquidity already. I've got an active user base. It's kind of a no-brainer. So to me, those are the kinds of mechanisms that like build the Lego blocks that allow for kind of the emergence of this net new capital.
Yeah, I mean, it's good that you mentioned that. I mean, we can't, like, if we get into HIP3 and builder code, so we'll be here all day basically. But yeah, that is like a genuinely and yeah, I mean, I definitely think it is worth noting that like there's no like incumbents, that they're not the ones innovating. That is true. So, and yeah, I think there's going to be like two. Yeah, you can have TradFi and DeFi existing parallel. Like insurance, like that was one thing cited by J.P. Morgan specifically of like why they don't like like they just said it, they don't like public blockchains. That's one reason why they just can't like something happens to the money on Ethereum. Like there's no one they can go to. There's no like government. There's no insurance provider. It's not FDIC insured or whatever. But yeah, I think it's definitely good to note with the growth trajectory for Hyperliquid, knowing like who you're targeting, who you're not targeting as well.
Yeah. I thought that came across while you were discussing that was also to think through a little bit of a history lesson when it comes to like the fumbles that typically have ended up happening from like the finance side. Most of the big banks can make hundreds and thousands of these fumbles before it makes meaningful impact on kind of their business, right? But even big fumbles that they make is so detrimental to their reputation that looking at new frontier stuff typically is too risky for them to ruin that reputation. And that by and large has been why the slow pace of innovations happened on the TradFi side. And like, actually, I can critique them all I want, but I actually kind of want that from my bank. I actually want them to be stable. I want them to be around for a long period of time. And that Lindy effect that happens is what I think is still a good bedrock for 99% of the world today. And that part of it, I think, is still really, really important. And this new frontier stuff, I think, it's probably been the best financial global experiment that's ever happened. That the excitement is so intoxicating that like this interest from the stable side, I think, is really, really cool. But I also, at the same time, kind of want to marry risk and reward, thinking through the idea of like, okay, if my bank's becoming degenerate, like, does that actually make me like my bank more or like it less? Like, that's a question I often see folks in crypto don't take into consideration. And so, like, yeah, this is always going to be completely new. The rules are different. The dark pools that like even existed in TradFi, those rules won't apply to dark pool type protocols in crypto. It's a whole new ball game, whole new set of problems to solve. That's kind of why it's exciting to the younger folks.
You touch on a very interesting dynamic, I think, which is you have, and you see this across industries, right? We've seen this before in other industries where the status quo, they can't really afford to take risks. So what happens, you have like this new players entering the game, and they can afford to innovate, and then they become disruptors, right? And then it gets to a point where they front run the market so badly that by the time the status quo is like, oh damn, we need to get on this wagon as well, it's already too late. And we're starting to see maybe like the first signs of that with things like Circle and how big they're becoming, everything in the in the payments and stable coins industry, right? Do you think that will happen on a larger scale as well, where like banks might get, I don't want to say they'll stop, they'll get annihilated or anything like that, but where it might get to a point where like, projects like Hyperliquid or a Circle or big projects like that, maybe Tether, they they establish such a massive moat that they sort of become like the new status quo in 10 years from now.
Yeah, 100%. So thinking that institution, like, okay, so thinking from 2016, oh, the institutions are coming, the institutions are coming, like they never actually really did come in meaningful size, but we
Right.
gave birth to a ton of new ones. Like all the big successful VC funds are technically institutions. All the
Yeah.
big stablecoin providers right now are technically institutions. And so there's a new wave of institutions that are going to come out and big key players for the space. It's like saying, Google created Gmail and was super successful on Gmail. Didn't mean that when I'm or WhatsApp came around that like it replaced Gmail. It just was a new medium, and it was
It's a
just like
new
a new
layer.
big establishment communication tool out there. So I think yeah, crypto will eat the banks. I fundamentally disagree with that argument. But crypto will establish itself as a use case. And if you think about payments in the example that you said, it's an efficiency game. Like the communication example that I used earlier, I now know that if any email comes in, I don't actually have to respond to it immediately. It's the slow version of my business day. But the DMs that come through, that's when quick business happens. So I've bifurcated like my workflow. One's a bit more streamlined, more efficient for getting stuff done in a different way, and the other one's a bit slow paced. I can take care of that in a bit more of a whatever method people want to use. I think the same thing will actually happen with payments as well. Crypto rails will be so much more faster and efficient that it actually will unlock a new set of use cases, especially when you think about emerging markets and like the time to settle, that whole space will grow by itself and people will start using the different rails more in a way that's way more optimized for those use cases. I still remember when Bitcoin was thinking, people were thinking about doing cross-border settlements with Bitcoin, and the 10-minute block time was insanely fast, like ridiculously amazing for kind of what was traditionally out there. And people thought the entire payment infrastructure was going to be built on Bitcoin. Turns out Bitcoin was even still too slow for that. And even just like USDC transfers on Ethereum was an improvement on that. And we can get to a point where now the improvements on L2s can even make that more efficient. So I think on dimensions of speed, cost, net settlement, and all the kind of like middlemen that take their cut, all of that will fundamentally improve and make it a bit more efficient. So there'll be an entire payment economy that's crypto rails. There'll be some sort of middleware that's half half, and the other payment rails will still work at a fundamental level. Like I don't think the day when a government has to pay its debts from treasuries for whatever reason, that transaction will happen on chain. So like a government repaying some of its debts, I think it'll be that'll still go through the traditional rails. Like there's always going to be a space for that.
Right,
Someone's got to
right.
hire the COBOL, the guys who are coding in all the old school languages,
Yeah.
COBOL and everything. We can't let those
Right.
guys lose their jobs yet. So someone's got to keep those legacy systems running, I think.
Yeah, on the money.
Yeah, I mean, what is global wealth at right now? Like all the wealth in the world is like set around 70. It's like 70 trillion, if I'm not mistaken. So it's like there's a lot of there's a lot of money to go around. Like it doesn't have to replace like stablecoins don't have to replace banks. To see your Circle stock go up or XPO token go up. You can take a very like small small fraction of that, and then for like 99% of the people living in Europe, living in North America, like they don't even notice anything. But yeah, quietly, like a lot of the market share has shifted to the stable coins if that's what you think is going to happen. So yeah, definitely there's a lot of money to go around. Like for Hyperliquid specifically, I'm like wondering what are like some specific like new use cases that you think could play out? Like, are we going to see like dudes trading oil on Hyperliquid, anything like that? Or you think because right now it's pretty much like it's the dominant DEX in crypto, right? So now it's like it's eating into Binance, eating into OKX, Bybit, those guys. Um, but maybe a few months down the line, a year down the line, it kind of like stagnates, peaks like of what it can realistically take from these large exchanges. Like, what is the next step for Hyperliquid? Like beyond the just the pure crypto side of things. Like, can we get like commodities, like stocks?
Yeah, HIP3 basically enables you to deploy any market. What do I mean? That's like a very general statement, but let's get into like what people are talking about today. Stables is still one of the most exciting things that happened in crypto. It's probably the thing that got product market fit on a global scale for our industry. And so deploying stable markets, I think, would be something that naturally brings a lot of like flow. And I don't think every stable will be worth the exact parity, and so figuring out where the stablecoin economies like sits will need some sort of trading venue for something like that. Then, if you think about the tokenization efforts that have been happening on RWAs in general, whether you want to tokenize exotic wine or treasuries, and kind of the whole spectrum in between, that I think will also be there'll be a couple of teams that are going to be spearheading deploying some of these markets. So Hyperliquid at the end of the day kind of moves away from just being this killer product and really the bedrock of a big part of the financial economy, and like the new wave of apps that build on top of that become kind of the middleware that we've seen in today. And like even though it's middleware, the number of middlemen between what we've experienced with the traditional world and today is going to be so much more like thin, and the margins are going to be so much less over a period of time. So from a next step, I think like keep an eye on the teams building on Hyperliquid. Like we are
Sure.
one of them, but like my peers that are currently there have some really really good ideas in the trenches right now. Some have announced what they're building. So there's Felix, that's a stablecoin provider that we're good friends with. There's a bunch of liquid staking platforms that have also launched the standard lending models. But then there will be this new wave of entrepreneurs that basically use these primitives to build their own versions of the Lego blocks.
An interesting thing as well is what Unit's been doing too. I saw recently that on the testnet they were testing out Nasdaq perps, and I think there was a
Nice.
long letter that they sent to the CFTC. You know, with a load of mumbo jumbo, and obviously I didn't read the whole letter. I have still got some semblance of a life, so I don't read all those things just
Yeah.
yet. But
Give it to Chat
I think it
GPT.
was signed off by a guy who was like a former chair in the CFTC, and basically saying that like they want to welcome tokenization of these different assets and indices on chain. So I think that's definitely a huge thing to look out for as well. And then, like you were saying with Felix as well, it's been the most successful liquidity fork that we've seen. There's been a ton of CDP companies who have tried to, push that narrative out there, but obviously Liquidity had its issues about a year or two ago with highly collateralized positions being redeemed at one point. But what we're seeing so far with Felix is obviously, I'm pretty sure with Felix, you can have collateral in Bitcoin and Hyperliquid at the moment, and then they've also just announced, is it the USDHL stablecoin backed by treasuries, in which I think they'll be using the yield from treasuries to continue to buy back hyperliquid tokens, which again we're seeing. I think Unit is also done the same thing. So this is such an interesting point, right? Where this behavior that we've seen from so many projects in the past where, we'll take like the tiers, the bearer chains, in which, your locked bags, you could stake them and then instantly dump your rewards as like a soft exit. Whereas like the stark contrast you see now is like loads of these protocols who just like, yeah, fuck it. All the money that we make, we're just going to buy more hyperliquid with it. And it's like infectious in a way, and it's crazy how quickly these narratives change. And it's also sort of like the game theory of it too. In the times of the Pool 2 era, food farming tokens, we had the Wonderlands, the OMS. It was essentially a race to the bottom. You were auto compounding or you were just dumping your rewards straight away. And that was much more of a PvP environment back then. And I tell you what, it's so much nicer now to not to see like the semblance of some of these projects taking the other side of that behavior. Because if you were, playing around on DeFi in those days, like you had to be really switched on, and like you check these pools someday and see like these farming rewards that you'd been like collecting and compounding for weeks and weeks are just worthless now because humans went against each other. I think that's one of the most interesting things we're seeing with Hyperliquid now is the change in behavior.
Yeah,
Yeah.
I think it's really good to bring up like the like hype as actual community money. Like people talk about community money, like that's actual like principles of community money that you want to see is like top apps actually directing revenues towards buybacks, and then like not the shit on Pump Fun, like a really good project. Is instrumental for Solana, but they've dumped like how many like 600 M worth of Sol presumably, or 600 M worth of Sol sent to Kraken. So yeah, definitely is like that is like an actual bot. Like I haven't really thought about that until you mentioned it, but yeah, that is like a very like it's exactly what you want to see, that kind of bond between top apps and the chain. Yeah, yeah, the it's like three core tenants. Yeah, the Hyperliquid exchange, successful in its own right, Hyper EVM, and then like HIP3, which is arguably like even more instrumental than the chain itself. So
Hyperliquid.
yeah,
I had to say it. Yeah, there's definitely a lot going on in Hyperliquid and at Silhouette as well. So before we wrap it up, I want to ask you, Chandler, like what's next for you guys? Like what's the next big thing on the horizon that you're gunning for, right?
Yeah. Newly newly founded team, fresh raise. What you can expect from us in the near future is obviously a product coming out fairly soon. So we'll be rolling out some of the comms relative to our doc sites and all the architecture for us. If anyone's interested in doing a little bit of a deep dive, we'll be opening up the MVP internal external betas in the next couple of weeks. So follow us on Silhouette underscore EX for updates on how you can participate with Silhouette a little bit more in the next coming weeks.
Yeah, that's amazing.
Fantastic.
You can finally shield your trades.
I'll still get liquidated anyway, so it doesn't matter.
No strategies to protect.
Yeah.
Exactly.
Darren, anyone can move freely on chain with Silhouette.
Awesome,
Right.
awesome. I think what was interesting about today's episode is that we really got into like the implications of like what private trading affects, and we basically like we touch on just about everything from TradFi to DeFi, stables, everything, and it's very interesting to see that this really like is so, it has implications for just about everything, how like the for the markets as we know it. So yeah, Chandler, thank you for those insights. It was an interesting conversation. I want to thank the audience for tuning in as well. Hope you enjoyed it. This was Market Cap, where we cover and explore current markets together with other sharp market participants. If you enjoy daily updates on current events, you can join our daily Intel channel on Telegram. The link will be in our bio. And you can, of course, join our next show. We're here live every Thursday at 10 a.m. Eastern Time on X, YouTube, and LinkedIn now as well. That's it. This was Market Cap. Thank you for tuning in.
yep. Thank you guys.
Hyperliquid.